All data and information is provided as is for informational purposes only, and is not intended for trading purposes or financial, investment, tax, legal, accounting, or other advice. Please consult your broker or financial representative to verify pricing before executing any trade. JMB Market Analysis is not an investment advisor, financial advisor, or a securities broker. None of the data and information constitutes investment advice, nor an offering, recommendation, or solicitation by JMB Market Analysis to buy, sell, or hold any security or financial product. And JMB Market Analysis makes no representation regarding the advisability or suitability of any investment. None of the data and information constitutes investment advice. The financial products or operations referred to in such data and information may not be suitable for your investment profile and investment objectives or expectations. It is your responsibility to consider whether any financial product or operation is suitable for you based on your interests, investment objectives, investment horizon, and risk appetite. JMB Market Analysis shall not be liable for any damages arising from any operations or investments in financial products referred to within. JMB Market Analysis does not recommend using the data and information provided as the only basis for making any investment decision. Data is provided by financial exchanges and other content providers and may be delayed as specified by financial exchanges or other data providers. JMB Market Analysis does not verify any data and disclaims any obligation to do so.
All right, good afternoon, everyone. It is April 5th, 2025 already. I haven't done this in a while. So anyway, I hope everyone's doing well. Getting a lot of questions from friends and even some family saying, the market's really down, what do I do? I'll tell you what you do. There's a really good indicator. That's with TC2000. This is something you could probably do on your own. You don't need me to do this. But we'll review what's going on right now. So the first really good indicator about market strength and what you should do actually is it's called the T2123. And what that is, it's a cumulative 4-week new high, new low indicator. So let's take a look and see how this works. So you can get generally a pretty good idea of what the current market trend is by using, there's a couple of indicators I use built in, and you can also probably select this too if you want to download a trial to TC2000. I use the word stochastics, and I also use the parabolic SAR. So basically what you can do is when the market has a crossover, you'll see this here. So I like using all these, and that's why I basically come up with the decision, really what to do. As you can see right now, it's below the parabolic SAR, which is a sell, these dots here. And as you can see also in the past, whenever it's dropped below the parabolic SAR, these dots, it's usually time to get on the sidelines or take some profits. And likewise, when it is above, it's time to get in. So there are some nuances to this. Usually I like to wait a few days to see how things will pan out. As an example, you can see this dot right here where it looks like it was a sell signal. I usually like to wait a day or two to make sure that how that shakes out. However, this one did continue. So if you have a change in the market going once or two dots or even three, don't bet the farm out quite yet. We want to get some more confirmation. Usually it's about probably like 3 to 4 days. But another thing which you can do too is if you're a cautious investor, you can say, as an example, we can zoom in on here. So let's let's zoom in. So using this indicator, and no indicator is 100%, by the way. You guys probably know that. So if we get in the market and say, hey, I think the market's going up. You could say, okay, that's great. Let's jump in. So say if we jumped in here, you can make the caveat to say, well, if it goes below a certain amount, like give it a percent or two, I'm out. Especially when you're getting back into something, you can say, hey, want to go in here? But it's starting to go down. Okay, it's going up. Or is it? It's going down. Okay, so it's starting to go down. So it definitely dropped below this point. So you could say to yourself, well, it didn't pan out this time. It wasn't a good decision. And you're going to have that. Like I said, there's nothing that's a perfect indicator. So getting back to the main topic here. So what should we do with the market now? Or what's the market going to do? Well, the market is very unstable. If you're a long-term investor, you can definitely get back in. I wouldn't bet the farm on anything right now. I think everything has so oversold, and we'll look at another indicator in a minute to prove my point here. So everything is so oversold at the moment. Eventually, it's going to snap back, and it'll be a time to get back in again. For those long-term investors who have like a 10-year plus horizon, don't worry about it. It's just a blip on the map. This is all you're gonna get through it. So that's one opinion about the market. Should you get in? I would wait and see. We need to have some days that are a bit calmer without any crazy ups and downs, and we're not getting that right now. So over the past, since, let's see here, just backing up, we can see back in February we got this negative signal around February and towards the end of February, and that's when I personally dumped a lot of my stocks around then. A lot of cash right now. If you're more aggressive, you can buy puts and so on, and you can do your own research on that. But anyway, things are quite ugly right now. I wouldn't go and buy anything quite yet until we get some stability. And it's okay, we're not going to know exactly when that'll happen. First thing that needs to happen is we need to stop having major drops in the averages. This reminds me a lot of COVID with the crazy swings. So I think things will eventually calm down a bit, and at some time it'll be a good time to get back in the market. But as of right now, it's pretty risky. If you have a long-term time horizon, you can load up on your favorite stocks. But as of right now, if you want to do some swing trading, which is going in, buying for a week or two or a month, it's just really, really unpredictable. So that's my opinion on that. Now, the other indicator which I wanted to share with you guys, let me find it. Just a second. That's not this one. Should have been better prepared. Okay, so the T2116. So what this is an indicator that shows how many stocks are 2% below the standard deviation of the 40-day moving average. And as you can see, let's just walk through this real quick. So when the market normally fluctuates, when I usually get an amount, when this indicator hits around 40, I know it's very oversold. As you can see here, even 30, it's very oversold. And we go back in the past, we can see that it was oversold back at the beginning of January here, and we had a nice bounce. Same last August, it went above 30. That's usually the indicator I will set up to say, hey, you may want to start considering buying because it's very, very oversold. Now, if we look back as an example, let's see if we can get back to when COVID happened, because I know. Let's just go back here. And sorry, this is going to be a bit crammed. I don't know if I can go back that far. I'll just have to I'm going to do a weekly chart instead. And I'm going to zoom back in. Let's let's see here. Where am I? So let's take a weekly chart going back to 2020, 2019 when COVID hit. We could see it has been more oversold in the past. Right now we're at a level, according to this, what I have here is at 57, which is almost 60. When anything usually ever hits in the past, 60 is quite oversold. Even 30 is quite oversold. So we're really pushing it here. Back when we were in COVID, it was at 90. Can't get much worse than that, right? Will we hit that level again? Yeah, we could. Not likely. But I think right now, like I said, this is why I'm saying that we're really oversold. Can it get more oversold? It can. And that would be a heck of a buying opportunity. So as you can see, back in 2020, we started to go oversold. And then we got really, really oversold. And what a buying opportunity we had between 2020 and now, 5 years ago, right? So what should you do? I wouldn't be buying, trying to guess where the bottom is quite yet, if that's what you're looking for. If you have a favorite stock that you want to accumulate, you might be able to get it on the cheap. A lot of tech stocks are beat up right now. That's the sector you may want to investigate. Going back to the daily, as you can see, also just a quick comment on the daily chart. A couple of weeks ago, we had an oversold condition. It hit 40, and as you see, we had a bit of a bounce, and then now we're way up here, which is very unusual. So if you want to jump in to your favorite stocks, now's not the time to be running from them, because I think it's a little too late to be pulling out of things. And what usually happens is a lot of people in mutual funds panic, and they'll put in their orders to sell, and the orders will go through the next day. And it's just a flood of orders, sell orders from the previous day. So, it gets quite messy. But right now, we're extremely oversold, and there's going to be some good opportunities out there to look at. Some of my favorites right now, I do like O'Reilly. Let's take a look at that. It's held up pretty well during all of this mess. It's going to do a 15-for-1 stock split. It's done well over time. As you can see, it bounces around quite a bit, but it's a great stock I feel, for a long-term investor. The other one that I currently have is the CME Group, which has some volatility to it, but they make a lot of money, and long term, it's been a bit, it bounces around quite a bit. But I think for the long haul, let's look at a monthly chart. I think at a long haul, this is something you can kind of stick with. It's hard to hold into those short-term the short-term volatility, right? Like, oh, my stock's going down, should I sell it? It really just depends. If you've been accumulating it, it just really depends. Like, typically, I don't like to lose more than 7% on a trade. If it does, I will have an automatic sell, and then, maybe another time I'll get back into it. But, so those are my two favorites. You can do your own due diligence and check it out. And that is all I really have. I predict that Monday is going to be a really interesting day. So, we'll see what happens. No one has a crystal ball. But like I said, overall right now we are oversold, and this pace can't keep up. It just can't. It's now I can see maybe if there was a nuclear war, maybe so. But this is a tariff, and we'll get through this. Tariff fears and so on, etc., etc. So, anyway, that is all I have. If you have a favorite stock you want me to take a look at, I'll be more than glad to do that. And next week should be quite interesting. I don't think it'll be the time to jump in next week, but if things calm down and things settle down a bit, it may be the time to get in again. So we'll take a look at that and see how next week goes. And good investing to you, and I hope you enjoyed our presentation today.